Welcome back. Let's get on to your markets now. Asian markets followed Wall Street's cue, trading and closing in positive terrain, well, largely. They looked past US jobs data that showed that over 20 million people had lost their jobs in the month of April, with the unemployment rate there up at 14.7%. That's the highest since the Great Depression of the 1930s. Instead, investors were said to be looking forward to better economic performances as economies around the world resumed activity, albeit at varying paces. Japan had a good day. The Nikkei share average ending the day up 1.05%. Hong Kong shares also traded up, with the Hang Seng Index gaining 1.53%. Chinese shares were somewhat subdued relative to other bourses on the day, with the Shanghai Composite Index ending up sort of flat, down 0.02%. Over in the United States, markets ended the week in positive territory as negotiators from the US and China discussed the first phase of the trade deal via telephone, with both sides agreeing to honor their obligations in terms of the initial phase 1 agreement. And valuations are soaring ahead despite a trend in earnings falling at the fastest pace since the global financial crisis of 2008, which does beg the question where the optimism is coming from, especially as economies continue to deal with the impacts of COVID-19. The Dow Jones Industrial Average rose by 1.9%. The S&P 500 ended the day up 1.7%, while the tech-heavy Nasdaq rose by 1.58%. Over in European markets, markets there are positive. The all-share index was also trading in the black, but that has since changed, with the likes of the resources and financial counters taking a hard hit. But broadly, global markets have been trending higher, with some attributing this to the fact that economies are slowly reopening following COVID-19 related lockdowns. But the cheer may need to be guarded, given that a balance will need to be struck to avoid a major resurgence in coronavirus cases, with the possibility of some having to go back to square one. The oil price is under pressure today, with the Brent crude oil trading around $30 a barrel. And things are so bad for oil producers now that we've learned that a major player, Saudi Arabia, has had to triple VAT in that country, as well as cut its citizenry's monthly allowance. Let's take a look at the indicators. Well, to break down the markets for us, I'm joined via Skype by Bright Kumalo, who's a portfolio manager at Vestact. Thanks very much for joining us, Bright. The data that's coming out globally is compellingly bad, but equities are broadly on the rise. What's going on?
So this is one of those cases where, everyone expects the data to be bad. So bad news here maybe is not so bad if it's not as bad as we expect it to be, right? So it's kind of like underreaction to bad news.
But then what then would spur the markets to be positive? They're positive about the future, but of course everyone needs to be cautious as they resume economic activity and ensure that they don't go back to square one, as I mentioned in the introduction.
Correct. I mean, markets, yes, they are a discounting mechanism. They do tend to be 8 months or maybe a bit longer forward looking. And like you said previously, you're talking about opening the economies slowly, watching for those, second and third cases, those resurgences you spoke about, and obviously monitoring everyone carefully to make sure that, you don't spread it if you have the symptoms, etc. What the market is basically, agreeing with is that maybe things will definitely be better than where we are today. But it's not saying that everything is good and well, and in, six months' time or 12 months' time, things will be much better than where we are today. But the thing is, once the economies are open, at least businesses will come back and maybe people can go back to work. That's what's the most important thing here is, getting accelerated. into, trying to recover those economic losses the whole world basically has experienced as a result.
It's been quite interesting. People have been writing columns and columns about the background of people's Skype interviews, and your background looks rather green and rather nice. So I wanted to ask you, where do you think people should be invested right now? I've seen that investing in the green future is an important one.
Yes, thanks for the compliment about these lovely vanilla plants we have in the background. What we've sort of, stuck to here at Vestact is to invest in businesses that, the new age kind of businesses that do not have any debt to begin with. And it's even better if they have a lot of, a cash buffer. So, very few companies come to mind. The likes of Apple come to mind when you talk about a big cash buffer. Google with, over $100 billion in cash comes to mind. The list goes down. Microsoft, over 60, 70 billion US dollars in cash. Those are the kind of businesses we're looking at, and we're saying, okay, even if the worst case scenario happened during these tough times, or maybe if they shut down the businesses and not operated for the next 18 months, they will still have to cash to accelerate them, against their competition, into, getting back to business faster and acquiring more clients, et cetera, et cetera. But it's even better if they're actually not losing anything during this pandemic and they're actually making, sales volumes or traffic volumes if it's an online business like a Microsoft Teams or, Google, because people are spending more time now on Googling stuff. That's why, the Google query has seen an increase of over 2,400% in terms of the queries it receives daily, in the past couple of weeks as we all under lockdown, and obviously we are more curious in finding out things online apparently.
So from my question about green things to fossil fuels, I see, as I mentioned, the oil price continues to take a bit of a hammering. A lot of businesses are said not to be doing quite well at $30 a barrel, and now Saudi Arabia, which is a major, now having to cut its citizens' income, as well as tripling VAT, which sounds crazy. Do you expect more of these ramifications, and particularly for us in Africa, for countries like Nigeria and Angola?
Well, we've already seen it, the wipeout in Nigeria. There's even a little bit more instability than you used to in Nigeria right now, because oil price has basically gone to zero for them. They're not profitable at these levels, and it's not looking good for them. A higher oil price is much better than a lower oil price if your entire economy depends on oil. So there's no two ways about that. Yes, Angola, faces the same challenges. And these tend to be a little bit more amplified if you're a developing economy as compared to Saudi Arabia, where they still have that option of increasing their VAT by 3 times and not actually hurting the taxpayers. Yes. The VAT, as a base, they're coming from 5%. They're going to 15%. They're just only catching up, with the rest of the world, right? And once the oil price stabilizes and it goes to a place where it looks much better, they have the option again to go back to their normal 5-6%. So it's not a train smash for those people. But if anything remotely similar had to happen down here at home, in Africa, it'll be terrible for that country, because we're talking about a country that's already losing on the top line in terms of those exports, those oil export revenues that they used to enjoy at an oil price of, say, $60, $70, $80 per barrel.
Yes, exactly. Bright, I'm told we have 1 minute left. Please give us your comments on Vodacom, which came out with their annual results.
Yeah, exceptional set of numbers, given the current circumstances. The data revenue side is, strong, but in terms of the data traffic, which only increased by 9.7%, is actually disappointing, considering the fact that everyone expected that, since the data prices are going to be down, everyone all of a sudden is going to be going online, getting a smartphone, et cetera, et cetera. It shows you that the same people that use data are still the same people. There hasn't been a big change. And the people that have always been engaged in terms of spending time on their devices, it's still the same people. That doesn't change a lot. You're not going to change behavior overnight, but obviously it will count, in the long term because it's going in the right direction. But the standout, shining star, 5.4 billion rands in terms of revenues, there was M-Pesa, 14.7 million people there. And if you have traveled into Tanzania or Kenya, you know that your Visa MasterCard is very useless there, because if you're not in that ecosystem of M-Pesa, you're probably going to have a terrible time being on holiday there, because it's almost impossible to pay for anything with your card there. So you need M-Pesa. So it itself reinforces this product to be the giant that it is in Africa. But the question I've always asked about M-Pesa is, can they replicate their success outside of Kenya and Tanzania? And so far, the question has been no, because, Somalia still also speaks Swahili, and there's other countries that are close to those countries that know about the product, but why hasn't it seen the same success? Can management be able to push it forward into those countries? But I guess the other question is that Safaricom doesn't exist in those countries because they've got Airtel and other things that operate there, which they've got their own version of M-Pesa. So these things are very tricky. But overall, I was very impressed that they kept the dividend as well at 7.5 billion rands. 1.3% increase there, looking very sharp. Dividend Puppy gives it a 2 thumbs up there.
Bright, we're going to leave it on that note. Thank you so much, Bright Khumalo. He's a portfolio manager at Vestat. We'll have more news for you after a short break. The Companies and Intellectual Property Commission, which is charged with registering businesses and overseeing their existence, is also the body which helps to initiate the business rescue process. Business rescue, as defined by the Companies Act of 2008, aims to facilitate and to rehabilitate a company that is financially distressed. Well, earlier we caught up with the Commissioner at the Companies and Intellectual Property Commission, Advocate Rory Voller. I first put it to him that business rescue was an important tool in assisting to help turn the fortunes of a company around.
To try and restructure themselves in a couple of ways. One is that it can either do so by coming back to a strength or a point of liquidity and solvency by dealing with some of their debt issues. But what it also does is, and the law also allows them, when it goes into rescue, for it to be a successful rescue. If it does then decide to go into liquidation, for example, and there's no hope of saving the company, but at least the creditors get more out of it than if the company went directly into liquidation without going into business rescue.
Yes.
So those are the two areas that they deal with in terms of what the legislation provides.
So what is it that the CIPC does? At what point do you intersect with the whole business rescue process?
Well, the actual business rescue process is what is called a self-administered process. So the company deals with it in terms of appointing of business rescue practitioners. CIPC is responsible for that. We are responsible to verify the credentials of the business rescue practitioners and basically what is called licensing of the business rescue practitioner to make sure that there is a cadre of business rescue practitioners who are well versed in the area of turning companies around and have the requisite knowledge and skill in order for that to do so. So the CIPC is responsible to accredit and license those particular practitioners.
And typically,
the other area that we're responsible for is to administer the legal process. So when a company decides to go into rescue, there's 2 ways they can do so. They can either apply to a court, and the court can give them a specific order to place them in rescue, or alternatively, the company can pass what is called a resolution in order for the company to go into rescue. Now, all of those documents are filed with the CIPC. What we then do is that we place the company in rescue. We change the status of the company from in-business to in-business rescue so that there isn't a run of the company in terms of creditors, for example, or any other enforcement action. And thereafter, we administer the process by asking for reporting, making sure that the business rescue practitioner does his job in a certain way, and also keeping tabs on the rescue practitioner in terms of some of the regulations that we administer in terms of the Companies Act.
And just for clarification for the viewer, when a company goes into business rescue, it almost enables them to go into a shell where they don't have to meet their obligations immediately. Is that right?
That's correct. It gives them a little bit of a space to restructure themselves. So what happens is that all forms of debt compliance or them being liable for certain debt structures gets put onto a hold for a period, they have to start dealing with it immediately, right? Because there are certain timelines that are stressed out in the law. It says that, for example, you must do your first reporting within 3 months. Within 5 days, you must appoint a business rescue practitioner. Within 10 days, you must have a business rescue plan, etc., etc., etc. So it does give them a bit of a bubble. It gives them a breathing space. It gives them an ability to not be majorly over-concerned that the creditors are all going to start knocking on their door and demanding what they require in terms of debt, but it helps them to restructure themselves.
Yes. Advocate, we've been hearing about very high-profile business rescues, the likes of SAA, and of course, more recently, we've heard about Pumelela and, other high-profile companies. But can small businesses also get that facility?
That's correct. All forms of businesses can apply for business rescue. You're right. The big ones do make the headlines, like the Edcons and the SA Express, ComAir, for example. But in terms of figures and in terms of stats and numbers, actually during the course of this year, approximately 140 companies have gone into business rescue. And by far and large, it's actually much smaller to medium size that go into rescue more than the bigger ones. So we've seen across between smaller ones and larger ones, it's across the board. Very
significantly, Advocate, how successful are these processes? Is the business rescue process?
Look, business rescue in terms of successful business rescues is not very, very high. I have to admit that. We've seen some big ones. There's a couple of mines that have gone into rescue that have successfully been turned around. We've seen some larger public companies that have gone in and been successfully turned around. And we've seen some successes. But we've also seen quite a large number of them eventually end up in liquidation. It's all about timing. Directors need to understand that when they see that there are liquidity and solvency problems, and there is an obligation on them in terms of the law to place the company in rescue, or decide not to go into rescue, and therefore they have to state that accordingly in terms of what the Act requires, timing is the most important aspect, we firmly believe, in terms of the stats that we've seen. The earlier and the quicker that you go into business rescue, the likelihood of success is far larger.
Yes.
So it's all about the timelines, it's all about making the decisions, and it's all about getting the right business rescue practitioner on board in order for them to manage the company.
Based on what you say, obviously the whole economy has been shocked by the implications of COVID-19 and the lockdown that we've had to endure. Do you anticipate that you're going to see many applications hitting your tables now, given the fact that so many businesses have gone into shock?
I couldn't have said it better. We are already seeing the increase in volumes. I've even shifted some staff into the business rescue area in my office in order for them to manage the volume that we are seeing and that we envisage to see in the coming weeks and months. There's definitely going to be lots of debt restructuring. There's going to be a lot of recapitalization of companies, and there's going to be a huge number of companies that are going to apply for business rescue. So you're 100% as far as that is concerned.
All right. And just in terms of the business rescue process, when it came to the Gupta company, it felt like it was for years. Typically, how long should that process actually take?
Well, the timelines are quite specific, all right, in the Companies Act. As I said, I mentioned a few earlier, you've got a 5-day period in which to appoint your practitioner. You have to have your first business rescue plan and your first meetings within a very, very short space of time. And thereafter, there's other time as to when it should conclude. But the law does allow you to extend. It does allow you also to go to court to ask for extensions on the business rescue plan, which we've seen a lot, because depending on the size of the company, many rescues are extremely complex, and they could take anywhere from 6 months to 2 years. It depends on the practicalities of what the company is being faced with, the industry in which the company is in. For example, if you look at SAA, very, very complex business, aviation and airlines, and therefore they have obviously asked for extensions because the business rescue is still in process. If you look at the timelines, that should have been concluding, but because of the nature of it, there is always extensions to this particular type of business. If you look at mines, if you look at certain types of industries in the IT area, they become complex, they do last much longer. But as to how long it shall last, becomes what is called shareholder activism. We also want shareholders to play massive parts in the rescue process. As I also mentioned right in the beginning of the interview, that it's a self-administered process that the company goes through. So we need the watchdogs. If you look at what the companies at even states, it says that even unions have a part to play in the way that a company goes into rescue. We've seen that in the past, a company going to rescue because of union pressure, a lot of union pressure. So we need all of the stakeholders that are involved in the company to play the self-administered part to make sure that there's a lot of activism and make sure that the company is able to deal with its legal obligations as quickly as possible.